Bloomberg Audio Studios. Podcasts, radio, news.
So here's the latest this morning. Traders bracing for economic data after Fed officials signal more clarity is needed on President Trump's economic plans. The Federal Reserve Bank of Richmond President Tom Barkin joins us now for more, alongside Bloomberg's Michael McKee. President Barkin, good to see you, sir. Great to catch up once again.
Happy to be back with you.
The first question we ask Fed officials these days is, did you include possible tariff changes in your outlook? So let's start there. Did you?
Well, so you're talking about forecasts we did in December.
Yeah.
That seems like a long time ago now, doesn't it?
A lifetime ago.
Yeah, no. So I think right now, if you look forward, you have to say tariffs are coming, are here, are going to be here. It's just incredibly hard to know exactly what it's going to be. So I think the concept of tariffs, sure, but the reality of what specific tariffs on what specific countries at what specific percent on what specific goods, we don't know.
The market seems to believe that on the margins, this just means the Fed is going to take its time, that you're going to take your time and assess all the data, including all the tariff announcements, and that you're not going to be in any rush and potentially may not cut it all this year. Do you agree that on the margins, the tariffs and the potential ramifications, the uncertainty would delay you from cutting rates?
Well, what I'm hearing from everyone I talk to is just elevated policy uncertainty. And you mentioned tariffs, but deregulation, where is it going to hit? Where's the tax plan going to come out? What's going to happen to net migration, energy policy, geopolitics? I think there's just a lot of uncertainty in the air, and it's very hard to know what's happening with growth and employment, what's happening with inflation, until you get a little more clarity on all of these uncertainties.
So what are companies telling you they're going to do now? Is everybody just sitting on their hands? What does this imply, the uncertainty imply for the economy?
So I think it's really interesting to look at these optimism indices. And if you go back to November and December, the Richmond Fed and the Atlanta Fed and Duke do a survey of CFOs. What you saw was total optimism on the economy went up significantly. New administration, climate for business, whatever. Optimism about your own company pretty much flatlined. And I think that's because people are dealing with this uncertainty. We think this will be good, but I don't know how it's going to play out in my business. Small business uncertainty had the biggest jump in, optimism had the biggest jump in its 40-year history, and then went up again last month. And I think small businesses are saying climate for business. Now, they do more of the hiring. The big businesses do more of the big investments. And so I think it's possible we may see another year like 2019, where consumers are spending and people are hiring, but investment sentiment is still a question mark. And that's what I'm looking to see.
Well, what's your kind of baseline for how you're going to judge the economy, given all of the uncertainty? You go into March 19th and you have to make a decision one way or the other. The default, I guess, would be to do nothing. But where do you think the economy is going to end up over the next 6 months while this cloud is over us?
Well, the case for wait and see is, in fact, that you want to wait and see. I mean, I start with a baseline economy the data's been pretty favorable. I mean, we had a pretty good growth in the fourth quarter. Consumer spending's healthy. Inflation, especially the last 2 months, has come down, and I expect the 12-month numbers to come down nicely over the next couple months as we lap last year's elevated first quarter numbers. Job market seems to have stabilized. So I start with a baseline that's pretty favorable for what we're trying to do. And then you have uncertainty, and it could take us up, it could take us down. We'll just have to see.
Do you still see the Fed cutting at some point this year?
I mean, that's certainly the lean, but we'll see what happens.
Could the Fed potentially see anything that could cause you to contemplate hiking rates?
Well, I never take anything off the table, and so if you never take anything off the table, you can't take anything off the table. So I'm not going to do that. But you'd have to see an economy overheating, and I don't see any signs of an economy overheating. I see inflation coming down, not going up. I see the job stabilizing, but we got the JOLTS data yesterday. It seemed to come down a little bit. It doesn't feel like we're overheating, and I think you'd have to imagine you're seeing an economy overheating.
Let me go back to the base case idea. At this point, do you think that interest rates are suitable for this economy? For a while, the Fed was saying we need to cut because we're still tight. But if you can't, is that okay? Are you looking for data that will tell you to cut, or are you looking for data that will tell you to hold?
Well, so I supported the recalibration we did, obviously, in the fall, and that's because with inflation in the twos and unemployment weakening at the time, the one number that seemed out of range was having the Fed funds rate at 5.3. So we brought it down 100 basis points. It's at 4.3. I still think that's moderately restrictive, but we'll learn as we go. And if what happens is the economy comes back strong, you have to ask yourself questions about how restrictive you really are. If the economy weakens further, you can adjust appropriately. If inflation continues to come down, you could say, yep, I'm having the impact I want to have. If it doesn't, you ask yourself those questions. And so I think we've recalibrated to a place that is more sensible given where the economy sits right now. And I think it leaves us well positioned on whatever happens.
But to go back to a very old Fed term, what would your bias be? Towards cutting?
My bias is to see what happens and then react appropriately. As I said, I think if you look at the last SEP, there's a lean in there, toward cutting. But let's see what happens.
That suggests you might be equally as open to hiking. Is that the case?
That's another good way to ask the exact same question. So I'm going to go, I think the lean is toward, but let's see what happens.
So you would be open to doing so?
As I said earlier,
I understand you don't want to make that
prejudge
headline this morning,
thing.
but I just want to understand how open-minded you are on these issues.
I'm always open-minded on what happens with the data. If you see an economy that overheats, you have to respond to it. I don't see an economy yet close to overheating.
There was some questions about whether we are accommodative right now or restrictive. Can I just finish that? The Federal Reserve Chair, Jay Powell, I'm sure you watched the news conference, said that you were restrictive, then said financial conditions were accommodative. Can you square that circle at all?
Well, so I do think we're somewhat restrictive. I don't think we're hugely restrictive. We're a lot less restrictive, obviously, than we were, 6 months ago. But we'll see as we go. And like I said, if inflation continues to come down, that would be a positive sign. If the economy continues to, perform at a decent but not overheated level, that's a sign. But if you start seeing an economy heat up, then you'd have to ask yourself those questions.
President Barkin, appreciate your time. As always, sir. Thank you.
Good to be here.
The Federal Reserve Bank of Richmond President Tom Barkin there.